What led to the recent surge in the Dow Jones Industrial Average? It's a question that has been on the minds of many in recent times. The answer can be traced back to a sequence of events, beginning with the Federal Reserve's decision to cut interest rates. This was the third time in a row that the Fed had slashed rates, effectively bringing the federal funds rate to between 3.5 and 3.75%. The move was accompanied by an announcement from the Fed about plans to purchase short-term bonds and concerns about a dwindling labor market. Despite only forecasting one rate cut for the upcoming year, traders were not to be dissuaded. They wagered on further easing, with odds sitting at a robust 68% chance of 2 or more rate cuts in 2026. The news sent regional bank stocks soaring, and 10 stocks in the S&P 500 reached unprecedented highs. Interestingly, the S&P 500 was at a 5-day low heading into the Fed meeting. Historically, this has been a precursor to a bounce. Analysts had predicted a 0.7% movement in the S&P 500 on the day of the Fed announcement. Their expectations were centered around a 0.25 percentage point cut and potential future cuts. There were also whispers of a hawkish cut from the Fed. This term refers to a reluctance for further rate reductions in the near term. In summary, the recent surge in the Dow Jones Industrial Average can be attributed to the Federal Reserve's decision to cut interest rates for the third consecutive time, alongside plans to buy short-term bonds. This, coupled with concerns about the weak labor market and traders' bets on further easing, has led to a buoyant market. The key takeaway here is that even in the face of forecasts suggesting only one rate cut next year, the market remains optimistic and bullish. Remember, the world of finance is ever-changing and unpredictable, but with knowledge and understanding, one can navigate it with confidence. Stay informed, stay savvy, and most importantly, stay tuned for the next update.